Mr. Traeger, tell us a little bit more about how banks can leverage these third-party relationships to improve access to credit, expand financial services offered to consumers and small businesses, and talk about how important it is for especially community banks to leverage these third-party relationships in a very competitive environment relative to regional and large GSIB banks.
As a community bank, it's our goal to serve more people in more places that the big banks have great difficulty in serving. As I mentioned, we have 47 branches. Those branches serve a very real purpose in our community for a very unique clientele. But through those branches, it would be impossible to serve the few million consumers that we serve. Our infrastructure in the efficiency is just not capable of a person, or it's very difficult to have a person walk into a bank, walk into a branch, and get a $1,000 loan within 24 hours. We just haven't legacy systems, infrastructure. It is very difficult to do that. Like I said, we serve 100,000 customers through those 120,000 customers through those 47 locations. With the help of Inova and a fintech, we can serve a few million customers with a need and be able to provide access to that need that customer, for one reason or another, is hesitant to go to a traditional branch bank. So
it's fair to say, because the enormous cost of investing in technology is harder for smaller community financial institutions, these fintech partnerships are critical to level the playing field between the community, smaller institutions and the big banks.
Without question, and we aren't a small bank. It applies to us because we know the cost involved, but to our brethren, smaller banks, there's, 2,400 banks in the country. 1,800 of them are under $1 billion in assets. We're $6.5 billion. For those folks in particular that may not have the capital and resources, it would be vital for them to be able to partner with folks, with fintechs, the right fintechs, to be able to offer more products and services to more people in more places.
Thank you. Ms. Harbin, could you give us an example, a really good example of the financial inclusion benefits of partnering with the Zest AI and serving a customer who otherwise would not have access to credit?
Thank you. So with Zest AI, we have been able to make more accurate, unbiased decisions and go deeper with our members and provide financial services to them where they otherwise cannot get services. Zest AI looks at about 190 to 200 data points and provides us a decision in 2.4 seconds. It takes us, if a manual underwriting, it would take us 5 to 7 minutes, and we're looking at 15 to 20 data points. Zest AI has got many stories to tell you, but one in particular, a couple came in to one of our branches, and he had a temporary hardship where he had reduced hours, and he had didn't know how he was going to pay his bills. And we were able to approve him on the spot and provide $6,000 that he could use until he got back on his feet. That would not have been possible without an immediate decision from Zest AI. All consumers are looking for immediate access. You go to the drive-through somewhere, you want to be serviced immediately. Us being able to have a decision in 2.4 seconds is fantastic, and our members are elated with that service.
Mr. DeVere, can you speak to some of the recent pronouncements or expressions of concern from the Consumer Financial Protection Bureau that could threaten the innovation of artificial intelligence in promoting financial inclusion?
Yeah, I think from our perspective, we lean in with the regulators. So if we're talking about the CFPB, we are a supervised entity, and the regulations that are on the books are sufficient to protect members from our perspective. But we also work with the NCUA and have a tremendous partnership with them. And so, from our perspective, I think regulations are necessary to protect consumers. But I think, Congressman Barr, you brought up a very good point at the beginning. It's really about competition. And if we over-regulate, we will end up stifling competition.
Right.
And our financial institution will be for the worse.
My time has expired, and we might have time for some more questions, but we'll get to Ms. Roberti and Mr. Chartier in a minute. And with that, we now recognize Mr. Fitzgerald, Mr. Rose for 5 minutes.